Renting is cheaper than purchasing in all 50 states, so that means you should definitely rent instead of buying a house, right? Not so fast. We're gonna dig into what it looks like to rent versus what it looks like to own, which one wins in the short term, which one wins in the long term, and ultimately, which one should you decide to do to get the most bang for? So Kiplinger released an article in May saying that renting is cheaper than buying in all 50 states. And it went as far to say that in 21 US metros, the monthly cost of owning can be at least 50% more expensive than the monthly cost of renting. But a recent bank rate study gave us better data as to what is the median or the typical difference between the cost of renting a property and the cost of actually owning a property. So let's check that out. As of February, the median priced home was $412,778, which leads to a payment of $2,703 per month, while the typical rent was $1,979 per month. That's a difference of nearly $725 per month, or more than $8,600 per year. So let's break it down. If we rent instead of owning, we're going to obviously have lower upfront costs. The landlord's going to cover our maintenance and repairs. There's going to be no property taxes or HOA fees. Utilities may be included in rent. And rental insurance is going to be cheaper than homeowners insurance the majority of the time. But the downside of renting is rent can and will increase over time. Rent has increased or stayed the same for about the last 100 years, and that's not going to slow down anytime soon. You're not going to build any equity, which we're going to talk about here in a second, so no wealth building opportunity is had when you're a renter. The rental market is competitive. You get no tax benefits, and ultimately, you're not in control. The landlord can get rid of you, essentially, when they want, per the lease agreement. Now let's look at a couple of the pros and cons of actually owning a home, and then we're going to break down the financials in depth to see which one makes better sense. So pros of owning a home is you're going to build equity over time. You can boost your credit score. You can have fixed monthly mortgage payments with a fixed rate. Banks love loaning to personal homes. You get a ton of tax incentives, and then you can channel your inner fixer-upper to make a home look however you'd like. But the cons is you're going to have higher upfront costs. We're going to have to at least put 3.5% to 5% down unless we're getting a VA loan to get into purchasing a home. You got a competitive housing market with supply shortage, high interest rates currently, maintenance costs, property taxes, homeowners insurance, and HOAs. And there's obviously no guarantee that real estate's going to go up, but if you look at what real estate's done over the last, call it since the beginning of time, is it tends to go up in value over the long run. You got a pretty good chance of winning if you zoom out, but in the short term, we don't know what's going to happen on the micro level. And so you may be thinking, great, Jaron, there's the pros and cons, but break it down for me. Let me see the numbers. Which one makes better sense financially? Because all I heard was if I rent, there's a chance that I can save almost $9,000 per year. I'm glad you asked. Let's dig into it. Using the example from the bank rate study. If you rent, you're going to pay on average $1,979 per month. And while you may save a few bucks in the short term, and while you may not have to pay maintenance repairs, there are two huge factors, among others, that makes it a losing scenario to rent instead of own. Number one is you get no equity. You miss out on appreciation. I'm going to show you the power of what owning a home does over time. When you buy an asset like real estate and you're able to use a lot of leverage, which just means you can put a little bit of money down and then use somebody else's money to finance the entire rest of the thing, and then that goes up in value over time as you own it based on historical data, that creates what we call a net worth, aka our wealth. And if we look at the statistics, around 70% of Americans own their own primary home in the US, and that is where the majority of wealth is held for most Americans. So we can say, okay, the majority of people who live in my country own this asset, and not only do they own it, it is where most of their wealth is stored. And so you are saying, I am going to forfeit my option or my right to buy the number one asset that makes the most people wealthy in the country I live in. Maybe I'm not the brightest person on YouTube or in the world, but common sense says that's stupid. So let's not be that. Let's make good decisions based on what data is telling us is working for everybody else. No reason to reinvent the wheel. But maybe you still can't get over, well, I'm going to be saving $8,600 per month in cash. You are. But let's look at what you're going to miss out on. It's no secret that if you're going to be successful in real estate investing, you have to be able to fund your deals. Whether you're doing the Burr method or whether you're fixing and flipping properties for a profit, you got to be able to get to the closing table with money, and you got to have money to rehab the property. And so I personally use Backflip Capital when I need money to get to the closing table and to rehab my properties. I'm in the middle of a flip right now, and I partner with Backflip. It has been the smoothest smoothest process of all time. I literally went on their app, applied for the loan. You get pre-approved in less than 48 hours. You can lock in funding in just a few seconds with the touch of a button. Funding takes less than 2 weeks. Hello, that gives you an advantage when you're making offers on properties. And I can't say enough about partnering with Backflip Capital. They're great folks with a fantastic product that everybody listening to this should check out for the next time you go to do a BRRRR deal or fix and flip property. So here's what I want you to do. Go down to the show notes of this show. I've put a link for Backflip Capital in those notes. All you have to do is click the link so that you can download their app and get your next deal funded with Backflip. So if we take the median home price, which we said was a little over $412,000, put it on a 30-year note with roughly a 7% interest rate, that's going to put us at a monthly payment of $2,746 per month, which we've already conceded is more than what rent's going to cost. But what I want to look at is, what is this home going to be worth in 5 years, in 10 years, in 20 years? How much wealth would we be losing by not buying and instead choosing to rent? So if we look at this compound interest calculator, we can look and see, what is this property based on previous data going to be worth 10 years from now? And so I'm going to plug in the current amount, which is $412,000. I'm going to give it 10 years to grow at a 4% rate, which is pretty standard and average for real estate. And that tells me 10 years from now, this property is going to be worth $611,000. So let's take our $611,000. Let's subtract what we purchased the property for, which is $412,000. And that gives us right at $200,000 worth of equity in this property. Now, remember, we were saving $8,600 per month from renting. So let's plug in our $8,600 times 12. That's $103,000 that we would be saving by renting. Well, then let's look at that appreciation. Well, we just said if we buy and the property appreciates over the next 10 years, we've gained $200,000 in equity. When I take that $200,000, subtract it for the $100,000 that we were saving through renting, we come ahead $100,000 in the black. We win by $100,000. And that's strictly on appreciation. The second thing that we can't forget about is tax benefits. You get zero tax benefits while owning a rental property. But the entire time that you own this personal home, you're able to depreciate it and you're able to write off the interest that you're paying by using debt. Plus, we really didn't have to spend that much money to get into it, because if we're a first-time home buyer, we can put 3.5% down, or we could go get a conventional loan at 5% down. Well, you may say, well, it takes 10 years to make that. Okay, well, let's look at the amortization calculator on 5 years. If we look at 5 years, our property is appreciated to worth $502,000. And so we're almost at a break even for what we've saved on rent compared to what that property has created for us strictly in appreciation in a 5-year time span. Then if we expand the horizon even more to 20 years, property now is going to be worth around $900,000. Subtract the $412,000 that we originally bought the property at, and that gives us right around $500,000 in equity. Half of Americans in the U.S. don't invest at all. And a lot of the people who don't invest are the ones contemplating whether they should rent or not. I argue that it makes absolutely, in most cases, no sense for them to rent, because if they're not going to invest, if they're too scared to buy rental properties, they're too scared to do fix and flips, they're too scared to invest in the market, and all they do is just save a little bit of cash, then they've got no opportunity to build wealth other than to go and buy their primary home and then do nothing. It doesn't take rocket science. Go buy a home in an area that you like, put 5% down, 3.5% down. If you're VA, put 0% down and live there for 20 years and let compound interest do its thing. You're going to be in control of the property. The rate's going to be fixed. You're going to know what your payment is every month. You can make it look how you want to. You're going to gain on appreciation. You're going to get all these tax benefits. You can leverage to buy the home, and all those things are going to be guaranteed at some point along the journey. But you know what else is going to be guaranteed? If you only rent, you're going to get no appreciation. You're going to get no tax benefits, and you're going to have no control over the property. You're going to have no control on how long you can stay at the property. You're going to have no control on what the rents are going to be. You have no control on what the property looks like, and you're putting yourself at the mercy of somebody else while just literally burning cash every month that could be going into an asset that can make you $500,000 or more in the future. So I'd caution you when it comes to renting. Are there some scenarios where it makes sense? Of course, if you're going to live in an area for a very short amount of time, or you're in a transition period, you're not sure you're going to stay a certain place, go rent for the short term. But let's not make a habit of becoming a renter long term, because every month, every year that goes by, you are losing wealth. You're robbing from your future self because you're taking money and you're handing it to guys like myself who own a bunch of rentals and they win in the scenario. Because you're taking your money and you're giving it to an investor and you're making him wealthy. And there are some people, for whatever reason, their credit score sucks, they haven't had a job, they've had a hard time in life, they can't buy. Right? Let's leave renting for them. Let's let guys like myself, folks like you who are investors or want to become investors, create properties for folks who need a place, good quality place to live. But for us who are in a position to go make it happen, even if you got to squeeze to make it happen, I think it's worth it. I've been in that position where I didn't have a lot of money and I went and bought a house anyway because I knew over time it was going to make me wealthy. And every house that I bought has made me wealthier than before I bought it. Don't rent, buy, let appreciation take place over time, get the tax benefits, and grow your wealth. Hey, if you'll take a quick second, just like this video, subscribe to the channel, and then if you'll share this with somebody, it would be super helpful to us to be able to spread the news. That's how the channel grows. And then I feel like there's a lot of people in each of our networks that could use this video to help them nudge and give them a good understanding on whether they should rent or buy. Thank you so much for tuning in. We'll see you next week.